Good afternoon, everybody. Welcome to Swing Trading. I'm Connie Hill. I'm sitting in for Mike Fairborn as he has a little bit of time off, and I'm happy to be here. Swing trading was one of the first strategies that I embraced as a new trader. So it's something that I enjoy. Now, there's a lot of different tools that we can use to help us identify a target. We're going to talk about two of those tools today, and I'm going to have you help me evaluate on each trade setup, new example trades, what technique you think is the better one to use for our target. Okay, so we're going to have some fun here today. Of course, I think trading is fun, so we're always fun. Hope you're following me on X. I'm Connie Hill CS, and I have been able, my privileges have been restored so that I can post again. Some of you might have noticed that absence, and some of you asked me about that, but I am back. I am joined in the chat by Rachel Dashel. She is an expert in the markets as well. As you have questions, go ahead, chat those in. She'll kind of back me up here for things maybe I can't quite get to, but you'll want to follow her as well. She might want to chat in her handle, Rachel Dashel, or Dashel C. No, actually, yours is a little different. Rachel Dash CS. So follow us. We're post things that you might find interesting. Let's go through our disclosures, and we've got a lot to cover here today. What we talk about should be considered informational and educational, and content don't consider it recommendations. Options carry a high level of risk and are not suitable for all investors. Short options can be assigned any time up to expiration, regardless of the in-the-money amount, even though an in-the-money option has a higher risk of being assigned early. Think your paper money side of things does not replicate that functionality. It will not assign early, so just be aware, hey, if you've got a short option in the money, it could be assigned. The paper money software application is for educational purposes only. Investing involves risk, including the loss of principal. Past performance is no guarantee of future results. We might reference some futures, but we never really trade futures in this particular class. All right. Some of you had a blast in, where did you guys go? Last one I'm thinking was in Orlando. Did some of you show up in Orlando and have a good time at a market drive event this past weekend? If you live near there, I hope you took advantage of that. Next 3 events coming up are in warmer climates for our colder weather. Anaheim market drive the week before Thanksgiving. Houston, December 11th and 12th. That'll be a technical analysis and option strategies workshop. And then the last advanced options workshop we'll have this year is going to be in Miami, 19th through the 20th. You could consider it an early Christmas present to yourself, right? If you wanted to go. In any case, if you're close or you can get there easily, take advantage of these free events. We treat you really good. I'm surprised how good we treat you. I shouldn't say that, but we treat you really good. All right. We always want to take a look at what our market is doing, because that gives us some framework as we look at trades that maybe that we have going on, or as we're trying to identify maybe some potential new setups. We always want to talk about some swing trading concepts. And today I want to talk about using a couple of methods to determine a target. Last week, our focus was really getting to the party on time, getting into the trade just as soon as you feel comfortable with that entry. You know, if it can be done, if the entry is today, great, as opposed to having it be yesterday or the day before or the day before that. Okay, being party on time. So this time we're going to focus on a couple of different tools. And we're going to be looking at a lot of trades. Now, first of all, let's go look at the market. Then I want to show you what happened with 3 trades we placed last week. We're out of all of them. Okay, let's go take a look. All right, we've got our SPX. You guys have been following it. It had the big sell-off on Friday, and that was just a pretty massive candle. I mean, this is a 6-month chart, and that is easily the biggest candle we have had in the last 6 months. Look how many days it wiped out of bullish movement. I mean, several, right? Lots and lots of days. However, the market's kind of resuming. I think at this point it's gained back over half of what it lost on Friday, and so we're having a real strong recovery. if you guys were watching the markets earlier today, they were down initially. Back, well, actually, they opened right here, which was down from yesterday, went down, but then not very long into the trading day, maybe about an hour or two, the bulls started pushing things back up. At one point, this looked like a hammer, and now it's more beyond a hammer. Right now, it is more of an engulfing candle, but basically showing some bullish bias. NASDAQ looks the same. We'll take a look at that. It too was down early on, but the bulls started buying, started coming back up. The Wire Rabbit says, yeah, that kind of sounds like my week as well. Yeah, we're Friday, you're like, oh man, I am really down. And then having some recovery this week. If we're having that great of a recovery, let's see how far the VIX has dropped. And it popped up to about 20 on Friday. Oh, it looks like maybe even a little higher. High on Friday was 22.44, kind of settled about 21.5, something in that range. Again, gapped up earlier when the market was down, and then it's just been dropping. So right now about 1947, so it's in a little bit higher area. So there still is a little fearfulness out in the market, still some put buying over call buying, but it looks like that ratio is dropping, and that lets us know the market is not as nearly as concerned as it was initially. Let's take a look at our three trades. We did three trades last week, and they were all bearish. One of you said, why are we doing a bearish trades? And my response, and this was honest at the time, was that, we haven't had a lot of opportunities to trade those kind of conditions, and you guys need to learn how to trade those conditions as well. And so we just picked on stocks that were just not doing well, that were likely to continue to go down regardless of whether the market went up or not, because they were just having some tough times. So I'm happy to say we're out of all of them. Let's take a look. Oh, look, see, Dennis, you went to Orlando. Well, you said Orlando. I don't know if you went or not. Yeah, but some of you I know were there and just loved it. Okay, let's do this. Go to the monitor tab. We're going to come over here to our activity and positions. And we're going to look at not this one. We are going to look at our swing trades. Oh, go ahead, open them back up because we are out. We were out of two of them before today, and then the last one hit our stop. But let me just kind of show you some specifics here. We'll take a look at the first chart, and then we'll talk through the numbers here. Our first trade was on Whirlpool. And Whirlpool, you can see, I mean, it's been downward trending. July, August were really tough months for it. September. And so we got in here where that green oval is. We got in as it was bouncing off, looked like it was bouncing off the 10-period moving average. And it dropped quite well, and hit our target. So we were in that trade for about 4 days. Our target we had on that it hit gave us a return. We paid $3.40 for the option. We were able to get paid $7 when we sold it off, which was on Friday as the market was heading down. And that gave us, that was our most profitable trade from last week. It was a gain of about 49% if you go through and do the math on Whirlpool. So for a short period of time, is it worth it to you? You get to decide that, right? If that kind of a move in that period of time is helpful to your account, yeah, it might be useful to you. All right, next up, let's look at Kava. Kava, same thing. It had been downward trending, weak stock. Typically, when we're going to practice any bearish type of strategy, we're going to pick on a loser continuing to lose. That's what we're going to bank on, right? Is that trend is going to continue. We got in as it bounced off the 30 and was going down across the 10. However, it hit our stop pretty quick. We adjusted our stop each day to be about 20 cents higher than the high of the previous day, if indeed the high went lower. In this case, and I'll zoom in here a little bit tight here, You can see we got in on this day and it stopped us out. It wasn't too bad of a loss. We paid $7.15 for the option. We got out at $5.60. So that one we had a little bit of a loss on. We had a 22% loss. Okay, so on these swing trades, if it goes the direction you're not expecting it to go, we want to get stopped out as soon as possible. Once we kind of really know that momentum is going the other way. Okay, so that's what happened on Kava. We got to take the good with the bad. I want to show you all of it. Okay, KMX, CarMax. It's been downward trending for the previous 6 months. We got in again as it kind of bounced off this horizontal resistance around 47, also kind of corresponded to the 10-period moving average. And it dropped. Friday was probably the best drop that it had, but as we tightened up our stop loss, I put our stop loss on. In fact, I changed it this morning before the market opened to correspond with 20 cents higher than the high of the previous day. So 20 cents higher was 43.95, and I think I put that in at 44.15. And sure enough, early today, it hit it. So it got us out of the trade. We still made money on the trade, but it hit our stop and stopped us out. I'll show you the numbers there real quick. On KMX, we bought it for 405. We sold it at 5. Not as nice as what we maybe would have liked to have seen, but it didn't take a really big drop like Whirlpool did. Whirlpool really followed the plan really nicely, what we would have wanted it to do. So it's not too bad. It kind of made up for our loss. This one was a 23% gain, not a ton. We might call that a single in the world of baseball. We're happier to get a single than to strike out, right? So very good. Dennis, I'm glad you had a good time in Orlando. We want everybody to have a good time when they show up to these events. Absolutely. So that's how our trades fared from last week. So we're out of every single one of them. And yeah, this CarMax, you can see, got out at 7:54. I'm in the Mountain Time Zone. So I have my clock set to Mountain Time Zone so I can keep track of myself. So just a few minutes after the market opened up, about 25 minutes after it opened, boom, hit that stop and out we went. That's all right. We made a little bit of money in the process. All right. I mentioned at the beginning that we could use some different tools, technical tools, to help us identify potential targets on swing trades. Today, the first one we're going to look at here, I'm going to show you the stock first, and then I'll show you the tool. Okay. DoorDash has been having really a strong year. All right. And it right now has been in a nice little channel. And sometimes we can use these channels to give us an idea of where to put a stop loss as well as where to have a target. Okay. So I started at the beginning of this uptrend and just started on the bottom half. Those of you that haven't drawn channels before, I'm just going to kind of mimic what I did here. I went to the low here, and I'm just kind of connecting the low points. Oh, it looks like it doesn't want to draw again. That's okay. There it goes. And you connect the low points, and you want to make sure you're hitting at least 2. If you can hit 3, and I tried to hit 3 on this one. Actually, I wanted 4. 4 hits is a little bit stronger than just say 1 or 2, especially 1. Okay, and then you anchor that line in place, you click it, and then it draws this other parallel line for you. All right, I'm just going to hit escape so you see it, or don't, so we don't have it in here junking up our charts, but basically make sure it's touching at least a couple of candles. I could have come down here maybe a little lower to hit more candles. And actually, do you know what I'm going to do? I'm going to get rid of this one. I'll anchor it and no, I don't want to do it. Okay, we just want to remove it. Both channels we want to remove. And remove. How many did it create there? I actually want to adjust this one. We're going to redraw this line because I'm not liking the touches up here. I thought I had caught both of them, but as I'm looking at it closer, it's not looking like I want it. If I activate this drawing, let me see if I can just kind of pull this down a little bit. There we go. Okay, because I want to make sure I'm hitting at least a couple of candles. And like I said, I could have come down a little bit lower and hit a few more candles. So drawing a channel tool, if a stock is really channeling, can be a way to identify a target. So looking here on Dash, I wonder if this is Rachel's favorite stock. Dash. I don't know. That's probably a lame joke. She's probably like, yeah, I've heard that before. All right. We can look back and we can say, well, how long does it take to go from one end of the channel to the other? And sometimes it goes up really quick, but sometimes it takes a little bit of time to really work its way up there. So what we're going to do is we're going to work our way out a little bit. These guys don't have earnings until November 5th. So we could easily have a move for this stock to move up to the top of the channel and hit the end of it and take some profits out there. Something you need to know also about channels is sometimes that middle line here, that's kind of like the midpoint of the channel. Sometimes you might notice it acting as support, or sometimes it might act as resistance. Can you kind of see along in here how it didn't come clear down here to the lower channel? It just kind of would retrace back to the midpoint of that channel, and that can happen sometimes. Okay, so let's go ahead about 8 or 9 days here. Today's the 14th, so let's go to, let's say, like the 22nd-ish. That would be next Wednesday, so that'd give us a few days to be in the trade. We go out about that many days and we see where kind of the top of the channel is, and we could use that for our target. If the stock kind of falls short of that target, we can always go in and adjust it. But for our initial target there, now with the adjusted, it looks like about 294. Let's go 294.75. Okay. And that is going to be our target. Now, what about the stop? Well, the stop, we're going to adjust it as it moves through the channel, kind of like what we did with the puts that we did last week, the long puts. We went out and changed that stop loss, kind of trying to notch it in, try to lock in some of the unrealized gains. But really, if this stock were to go below our channel line here, we would think it's not continuing the way we thought. We would look at this and go, oh, it's not bouncing off the channel line. In fact, it's breaking down. Okay, so our stop for today, we're going to go, I'm going to take just maybe a nickel under this low because it is a little bit below the trend line here. So today's low is 266.99. So if we give it an extra nickel there, that'll be 267. 267. Was that last digit? Was it a 9? It was a 99. Okay. So 260. Well, we actually want to go lower. 266. I've got a minus from it. Let's go 266.94. 266.94. That's a nickel lower than the low. We're going to say we want to be out. Okay. I'm using a nickel here. You could use any value you want. You could go at 20 cents, a dollar. You could go a percentage if you wanted to. But what we're going to do with this is we're going to really rely on our technical analysis and rely on the fact that the stock seems to be bouncing at that bottom channel. Okay. So knowledge, and thank you for answering this, Rachel. So you use the wicks for your trend line. I do. There are, technicians will do it both ways. There'll be some that really like to use the wicks or the shadows. I'm one of those people. There are other people that only like to use the bodies. Either way is just fine. You just want to be consistent in how you do it. Okay, meaning don't go to the body on one and then the shadow and then the body and the shadow, kind of mixing it up. Whatever your methodology is that you settle on, it's more helpful if you just stay consistent with it, okay? But technicians of both camps have legitimate reasons to do what they're doing. All right. You think you've been using the close too tight? Could be. We'll see. All right, let's go ahead and put our trade in here. Now we're just doing a swing trade on this, right? It's an expensive stock, so some of you might want to opt to do an option strategy, which is just fine. We're just going to go ahead and we're just going to put it in this particular case for the stock itself. Okay. Let's go ahead and do a buy with an OCO bracket. One side will be our target, the other side will be our stop. In my class, typically we don't want to risk more than about $1,500 per trade. Playing around with this earlier, that meant we may only do about 20 contracts. Okay, so we're just going to do 20, and then we'll click on that little link to sync up the quantity there. We're happy to get in for whatever the price is right now. Let's make this first one our target, which is 294.75 or anything you deem it to be, right? You could make it be different. This will be a good till canceled order. So will this one. They've got to be identical as far as that goes, either both day or both good till canceled. And then here you can see this is intended to be our stop loss. We've got 2 rows, right? So this we're going to put at 266.94. All right. If it goes that low, we want to be out. We want to be out quickly. We want to minimize our loss. Okay. Any questions on that? Stagel says dash is below the 10 and 20 moving averages. Yeah, it might be. You can see here I've got a 10. Ooh, it looks like right now it's moving just above the 10, and it is above my 30. I would think the 20 might be in here somewhere. Not really sure where it might be because I took it off, right? Or I didn't have it on to begin with, I should say that. All right, let's send this over. We're going to put this in our bucket for this class, which is swing trades. Going to put it there. And as far as management goes, we're going to look at this each day. You could look at it maybe when the market closes, maybe look at it, once when the market's open, just so you're kind of aware of what's going on. But then at the end of the day, let's suppose that it makes some movement up here, moving along through the channel like we hope that it'll do, then we're going to come in and adjust that stop loss, okay? And we might use the low of the day. We might go, say, 1% below the low, something that maybe takes into consideration the fact that the price is moving up and we're trying to move our stop loss up with it. Okay, so we're going to look at it every single day. All right, that's trade number 1. We just used the channel on that one. Now we're going to do another stock here, PCG, which you can see I've drawn the channel in here. And let's kind of zoom in because it's really been a nice upward trending stock, started behaving that way in August. And this is really quite a steep channel. Now, some of you, as you look at this, you might go, well, if it's here, it's already halfway through the channel. Is it a good idea to pursue it? You could, okay? If we were to go out, say about, I'm going to go to the 22nd again. Okay, here's October 22nd. And I'm going to have to maybe pull this down a little bit more so we see a little bit more of our channel. If I go to the 22nd, and as I go straight up, our channel target might be somewhere in the neighborhood of about, oops, I missed the number. Let's come back. 1676. Price of the stock right now is at 1649. I actually think the number should be higher. I'm looking over here at the side, and I'm not seeing that portrayed accurately because really, if I put my mouse right at the top of the channel, that's saying about 1794. So I'm not sure why it's showing in the channel actually something lower than that. Okay, so we're just going to take what makes common sense. Yeah, it's sitting here about 1794. So on this, and I'm just going to make some notes here. This is PCG. 1746 would be our target. if we use the channel. Do any of you see maybe another price pattern in there? Sometimes we see multiple price patterns, okay? What is drawn, my eye is drawn to here is a flag pattern as well. I'm going to start with this bullish candle here. I'm not going to start down here because typically on a flagpole, it's a sharp vertical rise, pop, 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 okay? And so usually I won't count sideways days in there. If you're looking at a weekly chart, then, you know, they would get included. But we're just going to use this beginning of this candle. So we're going to go low at that date, and we're going to take it up to the highest point, which is going to be on that red candle. That's going to be our flagpole. And then here, we're going to draw in the flag. All right, what's it doing today? Definitely breaking out of that flag pattern. So this can be another way to determine a target. Let's see what kind of a target it gives us. And this is one of them I'm going to have you vote on. Okay, so we're going to duplicate the drawing. I'm going to take this, and there's two places we could put this. We could place the flagpole because that's the distance we expect the stock to move. We could put it at the back edge of our flag consolidation area here, or we could move it and put it right where your eyes think that it's breaking out. Okay, so if I wanted to do that, look at that. They're almost identical, aren't they? Yeah, they're pretty close to each other. There could be times when one is larger than the other. One with my never mind, I'm not going to say that. This particular one looks like it's coming up a little bit short of our channel. Okay, so if you wanted to go more conservative, you'd come up here to the top of the flagpole, and that looks like it is at 1781. I'm going to put a PT for a flag target. That must mean our boundary here. Maybe I didn't do this line quite right, because it clearly in that period of time, if I go out a little bit more, it's more about $18. Okay, so I'm going to change our channel target to $18 here, because truly that's what it looks more like to me right now. Okay, so I'm going to have you vote. Which target do you feel more comfortable with? Do you feel more comfortable using the flag target at 1781? Do you feel more comfortable using the channel target, which is it goes out a little bit further, right about $18? Go ahead, tell me what your thoughts are in there. How many minimum days should a flag have? Staygold asks. 2 to 5 days is ideal. Sometimes they take a little longer than that, right? So 2 to 5 days is nice. This one had what, 3 in the flag consolidation. You wouldn't really consider 1 day a flag. It might, sometimes you might see a really huge candle that comes down, and maybe it kind of looks like it's in that flag pattern, but 2 to 5 days is ideal. Let's see, Kevin likes the Fibonacci extension for flags. We're not going to use those today, Kevin. I figured maybe tools max is what I should lay on you here. Okay, you like the T2, you like the 18, you like the flag, the 17, the 18, 1781, 1780, wait, just in case it runs out of steam early. Okay, I'm going to say that I'm going to go with the majority rule here. And I believe the majority rule is being a little bit more conservative. Okay, neither answer is right or wrong. It's just different. Okay, so let's go ahead. Let's put our target here at 1781. Now, if we were using the channel rules, we would say if this stock goes down below the channel line, would put in a stop loss, right? We might give it 20 cents or whatever number you're comfortable with, right? Probably not a penny. Well, you can use a penny if you want, but that's pretty tight. We want to give it a little bit of wiggle room. If we're to use the stop that we would have in a flag pattern, it's going to be different. A flag pattern, if the stock comes back into this area, which I'm going to say is probably a little bit lower than we would use for the channel, if it falls back into this flag-ish area, then we're going to say, oh, the pattern is broken. We need to get out. Okay, so more conservative stop loss, would be maybe about, let's call it about 1567. So I'm going to say 1567 equals the flag stop. And if we're using the channel, maybe we might go to where that channel is, and I've got my candle on it. It's pretty close. So let's go the low, 1595. We could go 20 cents lower than that and say 1575, which would put it right where my mouse is right here. So not a ton of difference, but there is a little bit of difference there. 1575. They're almost in the same place, aren't they? Yeah, they are almost in the same place. You could choose whichever you want. I'm going to go with the one that maybe I'm going to go with the 1575 because I'm just going to go with the 1575, the channel stop, because that's the one I'm focusing more on this one particular one. So let's go ahead. Let's put it in. Again, if you're an option trader, now this is a low price stock, so some people might not even feel like they need to use options with it in a swing trade. But you could use options if you wanted. We're just going to do the stock in this case. So we're going to do it right mouse click, buy custom with OCO bracket, right? So we can have it put us in at a target and a stop. This particular one, let's go ahead. We're going to do 300 shares of it. We're going to sync up that quantity. Then our first one is intended to be the target that we go to. So here we've decided our target that we're going to go for was a little bit lower, right? Most of you said the 17.81 is the one you're a little bit more comfortable with. We'll put that in as the price target, make it good till canceled. Make this one good till canceled too. And then this stop, we're going to put that in. Oh, that was almost perfect, but it's not. Let's go with the 1575 is going to be our stop. So it'll trigger at 1575. We don't know what price we'll get filled at because it triggers that market order, but the intent is to get filled right away, whatever the market price is. Okay. All right. Before I send it on in. Oh, this is good. This is interesting. Wire Rabbit says the flag seems to be the more pronounced pattern to your eye. Yeah, very well could be, right? You get to decide, and neither one is right, neither one is wrong. The Wire says the poll gives you about the same as what the Fibonacci would have given us had we gone for that. You like the lowest candle on the flag for the stop loss piece? Yeah, you guys could have different opinions there. That's fine. I like you to have opinions because you've got to trade off your opinions, right? It's a little bit subjective. And so we're going to put this in our swing trades. We're going to send it on. All right. I actually have a ton. I shouldn't say a ton. I have several examples for you to take a look at. Want to take a breather here for just a moment. Want to send us over here to our Trader Talks channels because we encourage you to become a subscriber. So it just makes it so much easier to find our content. YouTube has great playlist functionality. And so it's, I have several that I've subscribed to, and then it just makes it easy for you to go to that channel, see what's going on. You can go to the playlist or you can come see what's coming up the rest of the day. Barb Armstrong is going to be doing the class after this, after the close. She had the class right before this, so she's quickly preparing right now for the after the close class. And then that'll be the last class of the day. And then we'll start again bright and early in the morning. Trader Talks in today's market, and Brent Moritz is going to be leading that discussion. That'll be right at the opening bell, 9:30 Eastern. But then you kind of can see the lineup of the day. Look whose name's out here. Rachel. She'll be teaching trading price patterns. She loves the technicals as well, so this will be a fun class. Okay, so it just kind of lets you see what we're doing. I am pointing out something that we've been doing that's newer, that is bite-sized content, which are short videos. They have to be 10 minutes or less, where we teach you just a concept, okay? It might take 3 minutes, it might take 8 minutes, something in there, but it gives you an opportunity to just learn a little bit of something. The last one I did a couple weeks ago was teaching you how to build some grid charts. Those are where you can see multiple charts on the screen at once and not just one big chart. So teach you how to do that. Okay, so take advantage of those little guys. Okay, let's head back. We're going to go back to our account. All right. Got PCGN as a swing trade. We got Dash in as a swing trade. And we're going to see how well these look. Okay. Because when I looked at these earlier in the day, they looked amazing. Okay. They might not look as amazing now if they've moved a bunch. Okay. So I drew the channel here on BTU, Peabody Energy. And it looked like I'm going to say it's a pretty steep channel right now. And maybe initially, maybe the midpoint of that channel acted as a little bit of resistance. Now, looks like it's gone through it today. When I was looking at this trade earlier, it was right here on our trend line, but it was only up like a little bit. Now, if we were using the channel for our target area, you might look at this and go, there's not a lot of room for it to go, right? You might go, oh, great, Connie. 35.46 all the way up to, this is 37. Well, we could go out a couple of days, 38-ish. So there's a little bit of a move, not a huge move, maybe $2.50 there for using the channel. Do you see any other price patterns on here? Okay, look, see if you see what I see. I'm going to draw it out here. We have another flagpole. I'm going to start it here at this bullish day off that trend line, and I'm going to take it up to its peak. It's going to be up right up there at the top of the shadow of that candle. And then this one just kind of went sideways. So we can keep that green line there as the top part of the flag. And then it consolidated kind of flat, like the wind blowing and your flag is just kind of straight out. Okay. It broke out of that today. So we could have an entirely different target based on the flagpole. So whatever this distance is, that's our expectation of its next move. Now, it's never guaranteed, but it's something that we can use for a target. So if you're like, that's not enough for me, Connie, let's see how this might pan out. Okay, let's duplicate our flagpole. Going to grab it. And in this case, I'm going to go to the breakout area of the candle, which I'm going to just kind of put it in the middle of the candle here today, because that's where it looks to me that it broke out. How high does it go? Well, it goes probably a little bit higher than our channel here, doesn't it? It's going to go to 4280, it looks like. Okay. 4280 on the flagpole. So I actually should make this an FT flagpole target, 4280. All right. What if it reverses on us? Well, if it reverses, guess what? It's going to come down out of the channel and it will come out of our flag consolidation area. Okay. So I'm going to use the bottom of our flag consolidation area, which is lower than our lower channel line here. We're getting a kind of a quick bounce off of it. But for our initial stop, let's go ahead and put it at about, looks like that's at about 3076. Okay, so we're going to go 3076 is going to be our stop. Let me just verify that again. 3076-ish. It was 3076. Yep, that's the bottom of that channel area and the flag area. It's more like the flag area. Okay, so that is going to be our target and our stop. Again, every day we're going to come in. We're going to look at this. We're going to see, how's it moving? Do we want to start moving up our stop loss? You know, initially here, we're saying, hey, if it reverses and goes back in the flag pattern, we want out. You know, but maybe it makes a decent move for us tomorrow and we'll go, okay, let's take the low of yesterday. Or if it's a really big long candle, you might want to take the low of tomorrow if it's a big candle. Okay, you can decide, but we're going to just be really active at moving up that stop loss. Okay, let's see here. Which one do you like better, the channel or the flag? Which target do you like best? The stop is about in the same place. Yeah, it is a nice little breakout trade out of that flag. Okay, you Duke and Sharon like the flag. Yeah. You guys, there's not a right, there's not a wrong if you want to be more conservative. I'm going to take the more aggressive target here that I put on the flag. All right, so in the interest of time, let's just go buy this and get it in our account by custom with OCO bracket. On this one, we can do a couple hundred shares, so we're going to. Again, if you're an options person, this isn't a real expensive stock, but if you're an options person, you could consider doing an option strategy. You could do a long option on it. You could do a spread on it if you wanted. Many times we'll treat spreads a little bit differently. So for our purposes here today, we're just going to stick with the stock here. Okay, that's our price to get in right now. Our target is going to go to 42.80. And we're going to make that good till canceled. We'll make our stop good till canceled again. And then the stop is really close, whichever one of those we use. And I told you I was going to use 30.76. So that's what we're going to put as our stop. But a couple of you like the channel better. The channel was could have been a little bit more conservative, right? Could go out a few days, and maybe you just go to the top of the channel here, or maybe you even go out here. Maybe it doesn't go up quite as high. So yeah, for that more conservative target, you certainly could do that, right? Nobody's wrong, nobody's right. And we're going to put this into our bucket about swing trades. So we're going to be checking up on these guys every single day. We can't be lazy. We can't go on vacation. I guess we could if we could check into our charts. I guess we could check in on our trades. All right, so we've got two potential targets on BTU, two potential targets on PCG, two potential, I shouldn't say targets, two exits, right? One hits a target, one hits a stop. And so we've got those. So again, we're going to be active with those stop losses. We're going to keep moving them up. Now, let me see what kind of questions you might have for me before we have to exit here. Tammy, Tam and Honey, before we leave, can you show how you get the 2030 SMA to stay pinned on your chart? Okay, let's go there real quick. We have just a moment. If I go to my studies, I put them on here as a study. So I've got my 10, I've got my 30, and I've got volume down here with an average over the last 30 days. One thing that I like to do, you could do it one of two ways. You could save it as a study set, or you could save it as a style. Okay, so I have a tendency to use more styles than study sets because I like the same look on my charts. I like the black background. I like the colors. I like the moving averages colored the way that I have them and that type of a thing. So if I were wanting to save this, would say style, you could say save style and give it a good name. This is what mine is called, 1030 plus volume. It actually had another study on there that I took off. Okay, so you do that, and then if you change it around or you open it up and it's gone, you can just go up and hit load style, bring that particular one over to you. All right. Well, we looked at our market. We looked at some swing trades that happened last week. All of them, we're out of all of them, and I would not be surprised if, again, by this week, we're out of all of them before we get together again next Tuesday. Okay, if you want to learn to swing trade, man, check it out in Paper Money. Practice. You could use these examples. You could come up with your own examples just to get a feel for it and get used to changing your stop loss and maybe adjusting your target if it's appropriate. Okay, just kind of going through that whole process really helps you feel more comfortable for when you maybe say move over and start doing some of these trades in your live account. Okay, so practice. Rachel, thank you for being here, helping out with those questions. You guys had some good questions here today. Barb Armstrong is going to be here right at the top of the hour, like we talked about. And we'll see you again first thing in the morning. Follow us, subscribe. If this was helpful to you today, go ahead and hit the like button on the way out. That'll help other people find the webcast based on the algorithm of the likes. All right, we'll see you at the top of the hour. Bye-bye.